love that intro. It always pumps me up. Welcome to the Node. I am Mike, aka Veteran Crypto, and David had to take the morning off, so it's just going to be me this morning. You're going to have to suffer through not getting the in-depth technicals that you're used to getting from David. But I do have some great information. So I'm going to be going through the news, and I have some really cool stuff to offer you about Aerodrome. So yeah, we'll just jump right into it. And this might not be a 2-hour episode, but we're definitely going to make sure that you get your alpha for the day. So as you can see on the screen, if you want to join the conversation, in the chat, if we would greatly appreciate it if you'd come on over here to YouTube and follow us at @thenode_channel. What up, Sack Nasty? And you can find all of our offerings here. So we have more than just this show. Obviously you have the Node from 9 a.m. to 11 a.m. Pacific Standard Time, Monday through Friday, with myself and David. Just got done with a great interview with Shal Kafur from Canton Network. It's a second interview that we've had with him. And we have this Thursday, we have Dagnam PI coming on from Constellation Network. Super smart guy. Always has some great information. Very involved in crypto regulation and has his finger on the pulse of all that's going on with that. We also have Crypto and Chill tonight, Tuesday, and Friday, 5 p.m. to 6 p.m. Pacific Standard Time. Myself and my buddy Jeff, that I'm sure you all are fully aware of. We just basically hang out, maybe have a drink, talk about life, and sprinkle in some crypto and like what went on in crypto that day. So more than welcome to join us for that. Not immediately after this, but after this, he does pre-records. Jeff does pre-records for the Blockchain Report. And he is great at finding early projects, some of which haven't even had token drops yet. So if you're into farming, then that's a great show to be following and watching. He's been doing it for years. Actually, that's what this channel used to be. We kind of consolidated and took over his channel, but that's who used to be on this channel. But myself and him started DeFi crypto and airdrops, and then we met David, and with his extensive TradFi knowledge, DeFi knowledge, we decided to kind of come together and merge, and we decided to start the Node. So the three of us are knocking this out. Sovereign Soil, that is myself and Drew over at Blockchain Basement. We just started that, had our first episode this past Saturday. And we are going to be doing that every Saturday. Don't know an exact time yet. I'm going to get that from him. But we're talking about emergency preparedness and homesteading. So if you're interested in any of that, that is a great show. I have 22 years in the military, both Army and Marine Corps. Also, I've been homesteading for over a decade now, since I retired from the military. And been in emergency preparedness for decades. So I even had a business, doing it for a while. And actually working with David right now to put together a mentorship program just to help people to get their preps ready. Depending on if you're, in the city, if you're in the country, if you're single, if you're, have a significant other, if you have kids. Basically helping you fine-tune, customize your bug out or bug in plan, depending on what happens. So more to come on that. And then, of course, we got David's market wrap-up every day. That is 1 p.m. Pacific, so 4 p.m. Eastern when the markets close. And here for the next couple of weeks, he's actually going to be working with one of our community members, Ellie, who he is going to take from her current level. She's been with us for a while, knows a little bit about DeFi, a little bit about crypto, but he is actually going to mentor her one-on-one through his coaching program and show everybody out there how he can take somebody from basically entry level and take them to a very competent DeFi investor, and being able to find the right projects to be invested in, the right liquidity pools, using the right advanced strategies, hedging her positions, hedging the risk of her positions, through looping and things like that. So yeah, stand by for that. I'm excited to watch that. Saturday nights, we got music for you. Jeff, that blockchain report Jeff, and Crypto and Chill Jeff, he is a DJ. And so he has started doing interviews with other DJs and doing tutorials, and then just sharing his music, just spinning some tunes. If you want to join him for a couple hours on Saturday night, we call that Saturday Night Fever. Pour you a drink, smoke it if you got it, and enjoy the music. Chat with people in the chat. The Red Pill. So in an effort to try to take the deep politics, because we're pretty based here and unapologetically so. But I decided to start the Red Pill months and months and months ago. We do it Thursday night at 6 p.m. Pacific. And it's where we just basically get drunk and we talk about all the things that you're not supposed to talk about. Politics, religion, whatever. Life, what it means to be a man, what it means to be a husband, or in a relationship, what it means to be a father, just all that kind of stuff. We've talked about magic mushrooms, psychedelic mushrooms, being used for for medicinal purposes, for like people with PTSD, things like that. So yeah, no, it's we have a little something for everybody here. So, and we are open-minded. If you are, if you lean to the left, that's fine. We're all about liberty and freedom here. Hold on one second. Let's see if I can get rid of some of this there. There we go. Yeah, no, we're all about liberty and freedom here. It's we're not partisan. We want to hear all opinions. So if you want to join us for the Red Pill sometime, and if you're unemotional and open for debate, a spirited but respectful debate, always looking for people to come on. It's I love a healthy debate as long as it's based in facts, logic, reason. You can't debate emotions. You can't debate how somebody feels. You're welcome to feel however you want, but your feelings are not everyone's reality. It's not a universal truth. There's no such thing as your truth. That's just your life experiences. It's your personal feelings. It's not everybody's. But I digress. All right. Let's see. Red Pill reveals all y'all's based personalities for sure. Yeah, no, it definitely does. And the alcohol helps lubricate a little bit. It helps it all come out. So, hey, Deadwood, what's up, brother? Good to see you, man. Yeah, Sovereign Soil. Yeah, that's going to get much better. As me and Drew dial that in. The next one is going to be EDC. Everyday carry. And for some people that's a firearm. For some people it's just like a multi-tool and a flashlight, and it's really depends on you. It's a very personal thing. How what you have in your EDC. There are some basics that I would suggest, but we'll start getting into that. But here on the next episode we'll be covering that, and then I want to start framing out some of the aspects that you need to really pay attention to before you start spending money, because that's a mistake a lot of people do, is kind of in haste, or because they're worried, they go out and they buy a bunch of whiz bangs and gadgets and end up spending a bunch of money on basically junk, trash that isn't going to, one, it weighs a bunch, you get a bunch of shit, you got to carry it all. So it's all about economy of movement. It's all about finding tools that you need, not necessarily that you want. Prep is not to impress people. Prep is to make sure that you and your loved ones can be safe, fed, water, secure, all those things. So anyway, we'll save that for the other show. But that being said, if you want to find us on X, let's go to Nya. It's at the Node channel, all one word. And if you want to go to our official website, where this is the landing pad. If you're looking for anything the node, this is where you're going to find it. You're going to find all of the news articles that I reference in the morning show here. If you want to go deeper, we don't have time always to go in depth on a lot of these topics. So I always post my where I source my information. Always trust but verify. So don't just take what anybody says, especially online, at face value. Everybody has an agenda, and that's just the way it is. So, I talk a lot about Canton and Aerodrome and stuff like that because, I'm invested in them. I stay knowledgeable on those. We talk about a lot of different projects, but as I'm going through the news, if you want to click on these, it will give you, kind of, a more in-depth look. We're going to start working on maybe giving like a summary to pop up so you can, find what you're looking for a little easier. I'll talk to David about that. But you got DeFi University at no cost. You can go through DeFi University and learn DeFi. It's a very structured course. Each lesson builds on the previous lessons, and you have quizzes, checks on learning. So we have a bunch of stuff here that we just give away. We genuinely want to help people and educate people and onboard people into this space. This isn't, just about profit for us. We just recently monetized, so we do have some offerings that that are that you have to pay for, but purely optional. Our Discord doesn't cost anything. Obviously, our channels don't cost anything. DeFi University doesn't cost anything. But anyway, let me move on. Private coaching. I'm going to be starting the emergency prep and homesteading coaching. David does DeFi, and again, he's going to be doing that live with Ellie. Showing that product so that you can all pull back the curtain and see what that entails and why he has over 400 clients that have paid him. What is it? Oh, hold on. That have paid him, for that service. AI newsletter. So I need to talk to him. It looks like we might have a server issue right now. It's a little embarrassing, but we'll get that fixed. This is all new. Yeah, he's been working on this for the past like 2-3 weeks. I'm amazed at how far he's gotten with it. I mean, it's insane that just about 3 weeks ago we started the node. We went from DeFi, crypto, and airdrops to the node, and he's managed to put all this together. But the newsletter is like nothing that I've seen out there. Sorry, I got a tickle. It's AI generated, but the cool thing about it is that you can generate it anytime you want and have it delivered to your email, and and view it on the web. But you pick the assets that you are invested in: stocks, crypto, commodities, whatever. As long as you know the ticker, you can type it in and hit generate. It will give you the trading ranges for the assets you choose. It will give you the liquidity pool ranges, the lines of support and resistance for the assets that you choose. If you want to get into DeFi liquidity pools and earn yield, it will give you the news. It will give you this, whatever the hot new trending social posts on your assets that are on X. So again, and it will give you links to all of it. So you can go through with your morning coffee or tea and read up on your investments. In a quick 5-10 minutes. Maybe enter some positions, some trading positions. Set some stop losses, some take profit, whatever. And you can do all that for $20 a month. So that's one of the things that we charge for. And it costs us money to do it, obviously, with cloud servers and the APIs to get the data and all that. So we do charge for that. But $20 a month, I mean, what's your time worth? I mean, how much time would you spend to go figure out trading ranges, DeFi liquidity pool ranges, find all the news on your assets, all of those sorts of things? My time is valuable. So, I mean, even if it's an hour, is your time worth more than $20 an hour? And per day, it's $20 a month is not a lot. I mean, that's less than $1 a day. It's like 75 cents a day. Not bad. So anyway, enough shilling what we got going on here. So let's actually dive straight into this. So I'm gonna go ahead and throw this up on the screen just to have something sexy on the screen while I go through the news. So let's see what we got going on in the chat. DeFi University is the best DeFi. Oh, hold on, I gotta sneeze. All right, false alarm. DeFi University is the best DeFi education system in the English language at no cost except for your time. And yeah, no, that's what we keep telling people. You got nothing to lose going through that program. But yeah, there is a lot of people that have gone through it, and they're even in this market. The best time to be learning DeFi is in these sideways markets, because if it's trending sideways, and maybe I'll pull up a chart here in a minute, but if the price is trending sideways, then when you're providing liquidity in a concentrated liquidity pool, you have the line of support and resistance that you want to find for your range. But the narrower the range, price wise, then you earn yield. The narrower the range, usually the more yield you earn. So in these sideways market, when there's not a whole lot of volatility, it's not throwing you out of range, because if you're out of range, you're not earning yield. So you want these sideways boring markets. This is the time, I can't stress it enough. This is the time that you need to be learning, crypto and DeFi, these boring times, stacking your bags, investing, intelligently, not in meme coins, not in projects that the tokens, that the tokenomics of the project aren't such that the token holders do not share in the profitability of the project. Projects like Hype that share the revenue on the platform with token holders, great project. Not to say that it's going to be around forever and that everybody should FOMO into it, but that's the type of thing you want to see. Aerodrome that I'm going to be talking about here in a minute. Sorry, spring allergies are starting to get me. Aerodrome, 100% of the revenue generated on Aerodrome goes back to VE Aero holders to provide liquidity, for swaps and things like that. These are the projects that you need to look for. And again, it's not a guarantee of profitability. Hype could it end up when it, in price discovery, whenever, all of this goes mainstream, it could end up being 10 cents. Aerodrome could end up being 3 cents. We don't know. You are very, very early to this. And we are moving from a speculative market to a utility market. But in the past, it's basically just been retail. And retail is emotional as hell. Is if they see a bullish post on X, it would send an asset, freaking, 100%, 200% profit. And then it would come, it'd retrace and come back down, usually. But that is a speculative market. We were guessing, speculation, we were guessing on what these assets are going to be worth. Most of the time, the projects didn't even actually have a working product. They were just claiming what they were going to do. And people were aping into them. We are moving into regulation. We are moving into institutions adopting this. The CryptoPunk, ethos in, the decentralized aspect of crypto, there's a place for that. But serious investors that have legal obligations to their investors are going to gravitate towards legally compliant projects that generate revenue, generate profits, because if they're not generating profits, it's not a good investment. That's what they're looking at. They're looking at solid projects that have proof of concept. They have a working product, that is addressing a real world issue or problem. And if it's not doing that, they're not investing their money. That's why they call it smart money. So you need to understand this. All right, moving right along. All right. I'll just read through some of these. I'm not going to be able to give you the in-depth, technicals that David does, but I'm going to do my best. Geopolitical de-escalation. The S&P 500 futures climbed 0.8%, and the 10-year Treasury yield dropped to 4.33%, following reports that the U.S. may pause military campaigns against Iran, even with the Strait of Hormuz remaining partially obstructed. Next up, we have the energy tax. Despite the easing of immediate conflict fears, oil remains sticky, a sticky inflation risk. WTI is hovering near 103 and 105. So that's oil. With analysts warning that prolonged shipping disruptions, only 6 vessels per day versus the usual 135, could add 0.9% to headline CPI this year. 30% of oil gets moved through the Strait of Hormuz. And there are a lot of countries, especially in Southeast Asia, that rely heavily on that. The Philippines, there's huge shortages. A lot of gas stations are out of gas, and prices have doubled or more. So this is having a huge global impact on the price of goods as well, because all of the ships that are carrying goods around the globe, they burn diesel. Trucks that move goods over the highways and and deliver them to stores and stuff, they burn diesel. A lot of factories and things like that, they use diesel and petroleum products. Anything with plastics is petroleum based. A lot of pharmaceuticals, petroleum based. There's a lot of things that people don't think about in their day-to-day lives that originate from petroleum. So this is going to impact for quite some time, until they can figure out ways to to kind of hedge the shortage, I guess, is the best way to put it. Asia's weakest month. Contrastingly, the MSCI, the Asia Pacific Index, fell 1% today, marking its worst monthly performance since 2008. Those that don't remember, 2008 was not a good year for markets. Largely driven by a massive sell-off in semiconductor stocks. Interesting. Crypto markets. Range-bound BTC. Bitcoin briefly dipped below 66K this morning due to low liquidity and delayed conflict risk. Resistance remains firm at 68.5. The Bhutan move. On-chain trackers. Looking at Arkham Intelligence, great resource as far as analytics, noted that the Bhutan government moved 25 million in BTC today. This brings their weekly transfers above 1,000 BTC, adding minor sell-side pressure to the market. Institutional Retail Bridge. Interactive Brokers officially launched crypto trading, BTC, ETH, SOL, and XRP, for the entire European Economic Area, providing a major regulated on-ramp during a period of extreme fear. Let's see. All right. This is going to be where I'm going to segue into the Aerodrome discussion. So the Aero merger reveal. Official details for the Aero unified platform are set for release tomorrow, April 1st. So rest assured, I'm going to be getting up in the morning early. I'm going to be watching what's going on with Aerodrome and any announcements and anything like that. I'm going to be posting it in our Discord. I'll be posting it on X. Make sure that you follow. I'm also going to be, probably mentioning some of it on tomorrow's show. I am lining up somebody that is very involved in the Aero ecosystem. Trying to get him on the show. and working on getting somebody from the Aerodrome, the actual organization Aerodrome, to come on the show and talk about what's coming up. So more to come on that. But so those that don't know, basically what they're doing is they're consolidating, Aerodrome and Velodrome. And the same company that built Velodrome built Aerodrome. And they are coming out with the MetaDEX 03. And that's the, we'll get into that. And they are merging the two tokens. So the Velodrome token and Aerodrome token is going to be merging into one. And they've already released, and we've talked about it in other episodes, how that is going to play out as far as if you hold, VE Velo or VE Aero, if you hold Velo tokens or Aero tokens, what the conversion rate, is going to be, based off of kind of market share. But let's see, Bitcoin native DeFi. Aerodrome was selected today by Mezzo, a Bitcoin native lending protocol, as its primary liquidity hub. Mezzo is streaming 2.25 of its total token supply to VE Aero holders over the next 30 days to bootstrap its MUSD stablecoin. I didn't know that. That's good. So here we got MetaDEX 03 that I was talking about. Ahead of the Q2 launch, Aerodrome is already leading DEX revenue charts, generating over $6.5 million in fees in the last 30 days, a 50% lead over its closest competitors on the base network. Compliance yield. In the MiCA regulated space, Tesseract unveiled new compliance-minded yield vaults today, targeting institutional capital that has been sidelined by recent volatility. And this is what I'm talking about. MiCA is, obviously the European Union, the EU, and that is their regulation. And for institutions and, institutions, banks, governments, anybody like that, to be able to invest in crypto or, these crypto projects or DeFi or, any of the vaults or tokenized assets, they are going to have to be compliant. If they aren't compliant, they are not legally able to invest. That is just the long and the short of it. So you need to be, if you want to be, degen, and you want to do, the decentralized aspect of crypto, that's fine. More risk, more potential reward. But if you have a long-term mindset and you are looking for the next Google, the next Microsoft, the next Amazon, you want to keep your finger on the pulse of which projects are staying aligned with regulation as it evolves. Love them or hate them. Coinbase is doing a great job of that. Circle is doing a great, they're the ones that mint USDC. They're doing a great job of that. Canton Network, great job. Aerodrome, great job. There is a lot of these projects out there. Binance or USDT actually got delisted off of Binance in the EU because it wasn't compliant. These are the kind of things that are going to affect the future of crypto and affect your investments both positively and negatively. So you need to stay educated, and part of that, again, is finding honest channels like ours that are going to tell you the good and the bad about, even the projects that we love. David, he loves bashing on Aero. I'm a huge bull. And he has legitimate, very legitimate, very logical reasons, the flywheel being one of them, that, because the flywheel can both work for us and against us. So, but we are going to pull back the layers on these projects. So if you don't like the truth, then, this isn't the channel for you. A lot of channels won't tell you that. They want eyeballs. They want you to subscribe. They want you to follow. We want that too. But we are a channel of integrity. We're going to tell you the good and the bad about every project. Our interviews. We did one with OpNet, the founders of OpNet, and Chad, came on, trying to get him to come back on again. Now that they've launched, and he was more than willing to address a lot of FUD out him and his co-founder. And we told him that we were going to ask him, live on the show, and he still showed up and spent 15 minutes addressing every single item of FUD that people had said about him. And I my hat's off to him, that he was willing to do that. That actually made me very impressed with that project, that he was willing to come on and address those issues. So we're going to ask the hard questions. These aren't going to be fluff pieces, and we don't get paid. Not a single project has paid us to be covered on our channel, and we will never accept payment of any kind to talk about a project or to have somebody on the show. This is not that kind of channel. But again, we do appreciate the support. If you choose, to tip or super chat or anything like that, we greatly appreciate it. We definitely want some help, paying for the overhead for the show, because everything we do here, we're paying out of pocket and have been for over a year and a half now. So, yes, if you find anything you hear or see or take part in here valuable, please, by all means, help support the channel. But let's jump into what I got up on the screen. So I just found this. I ran across this on X. The gentleman I'm trying to get on the show posted it. This is actually, I've been told, I haven't dug that deep into it, but I'm told that this is actually from the Aerodrome team. So this is giving a bunch of the metrics on what's going on the Aerodrome platform currently. So it has the exchange revenue, it has the total supply, it has the Velo and Aero total supply, it has the locks, the amount and the average length. So the max is 4 years. So of all of the Aerodrome locks, the average is 3.82. What that tells me is the overwhelming majority of Aero locks are long-term. They have a long-term mindset, because if you keep your locks max locked, you get max voting. Now, a lot of that's about to change, and we're going to get into that here in a minute. Epochs are going away. It's going to be real-time yield earning on your locks here soon. So when this new platform launches, the way that it currently is every week on Wednesday, usually around like 3 or 4 p.m. Pacific time, the epoch ends. And when the epoch ends, then you are paid out the yield for your voting, your VE Aero votes on the liquidity pools that you voted for. However, that's about to change. Epochs, again, are going away. It's going to be real-time, constant trickle of yield being paid for your locks, which I'm very excited about, along with a bunch of automation. So those that aren't familiar with Autopilot, I guess they're making it part of the new platform, to where you can choose to auto compound if you want, or from what I am reading, you are going to be able to harvest that yield and convert it into Bitcoin, into whatever asset you want. So if you want to use your yield to build your bags, you can. If you want to cash it out into USDC so that you can spend it, you can. If you want to, take that yield and, as you build your portfolio, you want to use DeFi. And I've been told, again, we'll go through some of it. And that's why I'm trying to get somebody from the project on, because I want to hear it straight from the horse's mouth. You'll be able to take out, and I know you can do this on Coinbase and Morpho, but you can take out loans against your assets to where you keep exposure to that asset. You don't have to sell your Bitcoin. You don't have to sell your Ethereum. You can take out a loan against it, and you want to make sure that you take out low loan to value, depending on the volatility of the asset. Like Bitcoin, 10%, 20% would probably be a safe bet, because you don't want to get liquidated. But you can also, on Coinbase, take out home loans. So you could use your Bitcoin and take out home loans. That's something that just started. So this is just the beginning of DeFi. DeFi is going to be the new financial system. It is going to make all this pent up liquidity in the traditional markets, all this static liquidity that isn't doing anything, or that moves at the speed of fuck. It's going to make everything move 24/7, 365. You can buy, sell, trade, tokenized stocks, real estate, everything can be automated. People are already using AI agents to do their trading for them because of, like X402 that was launched by Coinbase. X402 allows you to create a wallet, an account for your AI agent. If you want to do your DeFi, if you want to do your trading, we're using it. David built it to where it's doing our social media. We have basically a CFO, a chief financial officer, Bob from accounting, that is going to, in real time, look at all of our finances and track it all and give us daily reports and weekly reports, monthly reports, quarterly reports, annual reports on our expenditures and doing our taxes and all that. But because of data feeds and things like that, it's not much. It's a couple of cents here and there, but we can put liquidity into an account, a wallet, in the form of USDC, USDT, Bitcoin, whatever, and it uses that to pay to do its job. So we're automating this whole channel. We're going to have an AI that is doing our social media for us, that's finding all the best alpha and reposting it. I'm going to be going through and be doing most of the replies. I don't like automated replies. I think it's very impersonal. But again, our finances, all AI. Our music in between shows, we're going to be streaming music anytime that there's dead air in between our shows, and it's all going to be AI generated music. It's all going to be custom music, so that we don't get copyright strikes and stuff like that. All of that's going to be run by an AI. There's just so much that's going on, and that's being facilitated by blockchain technology. So you really need to educate yourself on this, because a lot of it is going to be seamless. As this technology evolves and the UI, UX, user interfaces and user experiences evolve with it, most people are going to be using blockchain technology and not even know they're using it. They're going to go to their bank app. They're going to be and just notice that all of a sudden it's like, oh, I can, automatically, each paycheck buy some Bitcoin. Or if I hold Bitcoin at my bank, now I can take out a loan against it. I can use it as collateral for a home loan. I can use it as collateral for a car loan, whatever. It's just going to show up one day, and people are going to be like, oh, well, if I hold my Bitcoin here, I can earn 1% or 2%. If I hold my USDC here, I can earn 4%. I can earn 5%. They're going to be using DeFi and probably never even heard of DeFi. It's already going on now. So these are the things that we need to keep our finger on the pulse of, because as this evolves, we want to make sure that we stay aligned with the projects that these rails are being built on. Because if the project that you're invested in isn't doing anything, it's probably going to go away. If people aren't building on it, if there's no adoption when it comes to technology, when it comes to software, when it comes to search engines, when it comes to anything to do with technology at all, adoption is key. And if there isn't adoption, it's going to go away. It doesn't matter how sexy the technology is. It doesn't matter how much hype it gets. Short term, yeah, you can trade hype and volatility. Absolutely. I highly suggest you do. I mean, if you do it right, it can be highly profitable. But long term, you don't want hype and volatility. Long term, you want solid projects that generate revenue, that are onboarding clients, that are solving a real world pain point. Algo fake out. Is Algorand like doing something crazy right now? Oh yeah, dude. Yeah. Freak Atomic. So Freak Atomic is the one that's helping us out, helping David out with the music. He's generating the music and stuff like that. We appreciate you, brother. So yeah, no, it's and I hate to call it confrontational because I don't want conflict. I just love a healthy, spirited debate. I love having difficult conversations and challenge having my point of view challenged as much as challenging other people's points of view. Because if you're not able to defend your position, you're not knowledgeable about your position. And that's why I like my point of view challenged. And that's why I always I challenge the XRP army constantly to have an open, healthy debate with me about the tokenomics and the token and the future of XRP, not Ripple, XRP. I've yet to have somebody take me up on it. But I want to stress that I'm not going to just FUD the project. Everything I say is based in fact. All the information that I give is from the Ripple website. It's from the XRP scan. The basically source of analytics for the XRP ledger. The tokenomics, again, straight from Ripple. Everything that I talk about, the court case with Judge Torres, all of it is based in fact. It's not those that don't know, I had over 40,000 XRP at one point, all through the last bear market. I was stacking XRP because they were going after a real pain point. Cross-border payments, SWIFT, where it takes days or weeks to move money cross borders, and it's expensive as shit. They were going after a real issue that holds up liquidity and slows up liquidity, the friction in the system. And so I was investing in it heavily, but they changed a lot of things. And so that changed my outlook. You can't be married to your bags. You have to evolve with new data, with new information. If you're emotional about your bags, you're going to be manipulated. You're going to be taken advantage of. So be careful. And I'm not just talking about XRP. I'm talking about all of them. Aerodrome. Aerodrome is making some changes. That's why I'm keeping such a close eye on this, because in their new platform or their new tokenomics, if there's something I see of concern, I'm going to call it out. And unfortunately, I got quite a bit locked up. So I'm hoping that nothing of too much concern comes up, because I'm invested heavily in Aerodrome because I see what they're building. I see a very, very bright future for the Aerodrome platform being a hub of liquidity. Yeah, no, my average buy-in on XRP was like 32 or 34 cents, and I got out at $2. I mean, I know I didn't pick the top, but you know what? Bing, bang, boom, I'm out. I got profit. I had Algorand, I had XRP, I had XLM, I had HBAR, I had all the ISO, usual suspects, and I sold them all because I saw the writing on the wall, and I could be wrong. 100%, I could be wrong. Those projects could go on to do amazing things, but I just don't see the traction with those projects that I see in projects like Canton, in projects like Aerodrome. But anyway, I digress. Let's get back to Aerodrome. So current TVL, there's $321 million of total value locked. Cumulative volume, almost $400 billion of cumulative volume, and over $500 million in fees. And again, all of the fees generated, 100% of the fees generated by Aerodrome go back to VE Aero holders. They go back to the platform to pay the people that are providing the liquidity, for the swaps and for all the different activities, the movement of liquidity. There needs to be that account, that liquidity available of those assets. That's why whenever you get into a liquidity pool, like say Bitcoin USDC, they have you deposit both USDC and Bitcoin so that whenever somebody's swapping between those two assets, they're paying a small fee for that service, and you get part of that, or in this case, all of it, with other people that are providing liquidity, because you are supplying the liquidity for that swap. Now, the new platform is going to allow you, which I love because it's a pain in the ass trying to deposit liquidity. And like VFAT does a great job of this. And I'm surprised it took Aerodrome so long. But soon, with the new platform, you're going to be able to deposit liquidity in just a single asset. So if you have USDC, if you have Bitcoin, if you have Aerodrome, if you have Ethereum, whatever, and it won't matter what chain it's on. So it can be on ETH mainnet, it can be on Base, it can be on almost any EVM chain, any layer 1, layer 2, and the liquidity is going to be seamless. You're going to be able to click on whatever pool you want to get into, whatever DeFi play that you want to get into, with your wallet connected, of course, and select what asset on whatever chain. Again, it doesn't have to be, the liquidity pool is on Base. You can have assets, you can have ETH on ETH mainnet, and you can click, I want to use that liquidity, and click deposit. And it's going to do all the swaps for you. It's going to do all the bridging for you. You're not going to have to, and it's going to have safeguards to where with slippage and things like that, to make sure that you don't get hosed, because of the lack of liquidity, that you don't end up losing 80-90% due to slippage. You can I believe you're going to be able to set parameters, but there's going to be minimums, is my understanding. So again, single click and boom, Ethereum off Ethereum mainnet gets automatically bridged over to Base network. It automatically gets swapped into the assets to provide liquidity for that pool and deposits it, and you're done. It's going to be that easy. It's things like this that are going to remove the barriers to entry for people to enter into DeFi. Grandma and grandpa, older people that aren't tech savvy. To be involved in DeFi right now, you have to be very knowledgeable. You have to understand how to onboard fiat, first of all, onto Coinbase. First of all, you have to know that all of this even exists and have a desire to get involved with it. Then, on top of that, you have to know how to onboard your fiat, into USDC on Coinbase or wherever. And then you have to understand wallets and how to safely, without losing, sending it to the wrong address, safely move your USDC, stablecoin, or other crypto into a hot or a cold wallet. Then you need to figure out, okay, how do I connect that to whatever DeFi protocol that I want to use? Then you got to figure out, how do I deposit into a liquidity pool or DeFi play that I want to invest in to earn yield? And then add to that, figuring out, is this a good investment or not? So, and understanding the mechanics behind these liquidity pools and the ranged positions and full range positions, understanding borrowing and lending, understanding looping your position, hedging your position. It's just this freaking very quickly, you go from like the shallow end where you can touch the bottom to where you're in the deep end, where it's sink or swim. So DeFi is very complex, but Aerodrome and Base, I just see them doing the best job with building out the UI UX, the user interface, user experience, to make those barriers, to remove those barriers to entry and ease people into being able to earn, to enter into DeFi. That is why I am so heavily invested in these projects. Is one, they're building a product that I see a huge pain point, a huge issue. They are addressing that. Two, all of the fees generated on the Aerodrome platform go back to people like myself that are BE Aero lock holders. And they're going away from the term locks. I'll get into that here in a second. I'm going to do a whole nother hour, so bear with me. I'm going to try to give you as much alpha as I can. So they are going to, all those fees. So when I was talking about the profitability of the platform, the revenue generated is shared with token holders. That is massive. There is a ton of projects out there that are basically meme coins. They're basically like buying a baseball card or wearing your favorite team's football jersey. They're a fan token. You're a fan of that project because there's nothing in the tokenomics where the revenue that the project generates or the fees that it generates make its way to the token holders. I hope that's key. You need to understand that, and hardly anybody's talking about this. It boggles my mind that a lot of these, and I do not consider myself an influencer. I'm not trying to influence anybody. I'm here to educate. But a lot of influencers out there, they talk a lot about these projects and how they're bullish and all the positive things about these projects. But they don't point out the simple fact that just like a stock, are you going to invest in a company? Are you just going to give a company money if there's no guarantee of if the company is profitable, that you profit as well? That that if you buy a stock, many of them pay dividends. They share the profits with you, like a strategy. Friggin' Michael Saylor, Bitcoin. You buy his stock, not crypto, but stock. They pay dividends. I believe it's like 10% or something like that annually, which is freaking awesome. But they pay dividends, and you don't have to sell any of your stock just for holding the stock. They pay dividends. Great way to earn. There's a couple of others out there. I want to say Apple does. Anyway, I'm not huge into stocks, so I won't talk on that. But anyway, that's the way you have to look at these tokens. Are they a security? That can be debated. There was a on some of the projects, but there was a court case, the Ripple court case with Judge Torres, where she ruled that retail sales of XRP were not a security, but institutional sales were. That can be both good and bad, but I'm going to stay on Aerodrome. All right, here we go. Yeah, thank God that white went away. No voting, no epochs, no delay between revenue accrual and distribution. This is what I was talking about. This is what's changing when it comes to the locks. And again, they're going to start calling it staking. It's not going to be locks anymore. Unlike the epoch-based system of Aerodrome and Velodrome, the new Aero will follow a real-time allocation process. In this new system, a first for DeFi, there will be no voting, no epochs, and no delay between revenue accrued and revenue distributed to staked, not locked, participants. So it's just going to be a slow trickle as people are paying fees. It's just going to be trickling into your account. So again, the way I look at this, and I don't understand the legalities, but the upside that I see to this is much like, investing in a company and earning dividends, is because you are providing liquidity to allow the protocol to function. Then it's like a savings account and earning interest. You're providing liquidity just like you would to a bank, and they're lending it out. They're doing different things with it. And yeah, they only pay you 0.07%, but they're charging 7% or more using your liquidity and giving you like 0.7%. That's why I love DeFi, is we get the yield, not the bank. And that's why the banks are kicking and screaming right now. That's why they're in freaking full tilt in Washington, D.C. with the Clarity Act, trying to make sure that part of the legislation is that we can't earn yield on our dollars, on stable coins. They want to earn the yield. DeFi is disrupting their business model, their monopoly. So that's why I'm so bullish on DeFi, is I want to earn the yield on my money. Banks, excuse my French, can suck a dick. They don't do shit for us except charge us fees. There's overdraft fees, there's maintenance fees, there's ATM fees, there's out-of-network fees, fees. They want to charge fees for everything, all while profiting off of your deposits that they're lending out 8, 9, 10 times. So for every dollar that you're depositing, it's called fractional reserve banking. They lend out your $1 to 8 different people. It's basically like printing money, and they're allowed to do it legally. And you wonder why the economy is in such disarray. It's because the banks and institutions and the government, they just make money. They just magically print money into thin air. And we're the ones that suffer for it. We're the ones that pay for it. Many of us are paying 30, 40, sometimes 50% of our of what we make in taxes. Between sales tax, gas at the pump, property tax, income tax for state and federal, it adds up. You start adding it up. People are paying 30, 40, 50%. You're working, 4, 5, 6 months out of the year for free to give it to a government that's wasting it, that's throwing it away, that's spending it on wars and crap around the world that have no benefit for us. We have crumbling infrastructure. Now I'll save that for freaking Thursday. Don't get me started. But that's red pill discussion. Hey, what up, Crispy? Yeah, and excellent point, Freak Atomic. Excellent point is inflation. If you have money in the bank, you're losing 7 to 10% a year in spending power. Let that sink in for a minute. If you have $1 million in the bank and you aren't earning on it, you're losing about $70,000 to $100,000 a year, basically, because that's how much you're losing in spending power due to inflation. If you're not earning 7 to 10%, you're not even keeping up with inflation. Don't get me started on, wanting to exceed that and actually build your nest egg and, and make progress with your investments in your nest egg for retirement. Don't even get me started on that. Like, just to keep up with the mismanagement of our government, you need to be earning 7 to 10%. Or, like my retirement, my military retirement. I make a couple of grand a month in my military retirement. I can afford, like 10 years ago when I retired, I can afford about half, just with that income. I can afford half of what I used to buy with that retirement in modern times because of inflation. Groceries cost twice as much. I eat very well. I'm a single guy. I spend about $800 to $1,000 a month. Used to. Sorry, that's what I'm spending now. But I eat, a couple days a week. I'll eat steak and things like that. But I used to spend $100 a week because I go grocery shopping once a week. I used to spend $100 a week, and it used to be about sometimes 500. Like if I bought a bottle of liquor or a couple bottles of wine or something like that, it boosted up a little bit. Now I'm spending $800, $1,000. I'm spending $200 to $250 every week that I go to the grocery store. It's insane. So yeah. So predictive allocation. So it says stakers. Again, like I said, it's not going to be VE Aero. It's going to be S Aero. It's not going to be a voting escrow. It's going to be staking. So stakers will allocate Aero rewards, which will stream in real time to liquidity pools, and in return, those stake Aero holders will earn exchange revenue as it accrues in real time on a regular cadence. Stakers can choose to reallocate, dynamically redirecting rewards in anticipation of shifts in market dynamics. This is the one I'm looking forward to. Autopilot enabled. S Aero holders looking for a hands-off approach can configure management of their position through autopilot, which automates the allocation process and can compound, so reinvest. Oh, sorry, take this down. Can reinvest your yield or convert earned exchange revenue on a regular cadence. So it's saying that you can convert it. The way that I'm understanding that is that the yield that you earn, you can convert it into stable coins. You can convert it into Bitcoin, Ethereum, any token that is on an EVM compatible chain, or the base network being one of them. So or ETH mainnet. But I'm bullish on that. I'm actually thinking about doing another lock, and I'll get to why here soon. As of right now, the last Aero lock, the last flight school that ends, I believe, the 8th of this month. April, yeah. No, tomorrow April starts. Here in a week, it ends, roughly. Right now, as it sits, it's being reported, it's like 41% or 45% flight school. So if you lock, say, 10,000 tokens, then you would get almost 5,000 tokens. You get like 4,500 tokens for free in an airdrop. And this is the last one. Flight school's going away. Okay, let's see. So we can have it automatically transferred to LPs or still manual. There's going to be no voting. That's what they just said. Is see up here, no voting, no epochs. So the voting is going away. What that's going to look like. What the user interface is going to look like. I don't know. Again, I'm trying to get somebody on the show from the team that's willing to go through that and share that with us. But very bullish on autopilot being on, like, natively on Aerodrome, because I'm going to use, full disclosure, I'm going to use all of my locks to build my Bitcoin bags, my Ethereum bags. I'm just going to have it automatically, go into the USDC, and then I'll probably, if I can, set up auto buys. I would love to have it, and I'm kind of going off the reservation here. I would love to have it where you could set limit orders to where, like if Bitcoin dips, like say, once this starts going, and say here in a couple of months, Bitcoin dips down into the 50s range or 30s range. I would love to build up a bag of USDC so that I'm not exposed to the volatility of the market, because I don't want to be in alts or Bitcoin or anything if the markets go lower. Build up a bunch of USDC, a bunch of dry powder, and have a buy order. So if Bitcoin like dips down into the 30s or something like that, even just quickly, I can have a buy order with a couple of grand where I buy at that $30,000 range, and if it bounces back up into the 50s or 60s, I just doubled my money. If I had $3,000 and it dips down and hits down into the 30s, and then goes back up, maybe now I have $6,000 in it of Bitcoin, and maybe then I sell it again, into USDC, set another limit order, and just let it sit there and earn, because there's some places that you can put it. You put your USDC and earn like 4 or 5%. So this is the kind of thing that I'm looking to do, is as these things evolve, come up with these strategies to where I can make DeFi grow my bags. I haven't bought with dirty fiat. I haven't bought any crypto in about a year. I want to make sure, let me do a check on integrity here. I'm trying to think if I have done any. No, I take that back. No, I used other crypto I had and DeFi to buy Canton. So yeah, about a year now, I haven't bought any crypto. All the crypto that I've acquired has been from earning yield in DeFi. I've either built my bags in DeFi, or I've earned yield, and just slowly as it builds up, especially Aero, because I have a bunch of stuff on the Aerodrome platform. The Aero, I just convert it into USDC, and so I have dry powder sitting. And whenever I see a cool new project, or if I see an opportunity to DCA into a project, I have dry powder to do it. So my crypto is working for me to build my portfolio. I don't have to keep investing and dumping money in and dumping money in and dumping money in. It makes me less emotional about it, because my bags, it's not like I'm using cash that I would otherwise be funding my lifestyle with to buy speculative assets. Because at the end of the day, crypto is highly speculative. It's a risk-on asset. And we don't know what's going to happen in the future. It all could go to zero. I'm being honest. I don't think it will, but you have to have that mindset that you're investing in something that's highly speculative. Thank you, Ellie. Yes, please like, follow, and share, and join the Discord. Like I said, you might not like everything you hear here, but it's my honest opinion. And again, it's just an opinion, based off the facts and the information that I find. All right. Aero will operate as a zero leak economy, where 100% of the value is distributed to users of the system, the token operators who coordinate the flow of liquidity, and the liquidity providers who deposit assets that make low slippage trades possible. Stake your claim. Holders who stake their tokens, not lock, stake their tokens, optimize the Aero economy by allocating Aero rewards to liquidity pools. In return, they receive a pro rata share of 100% of the exchange revenue accruing into the pool or pools they support. So whatever pools you support, you earn yield. So if you're helping bootstrap a riskier asset, a riskier pool, then you're probably going to earn more yield. But there's more risk. So liquid ownership. Each holder decides how long to stake their Aero. Once staked, the position is represented as an NFT that can be traded or transferred at any time. This is something new that's coming on. So the NFTs, it's basically your receipt for your stake, what used to be called a lock. There's markets for these where you can sell them, at a loss, but you can sell them. I have heard and seen where potentially you're going to be able to take out loans against them. So another play on DeFi. If you say that you want to invest in something, say that you want to buy a house, you need to buy a car, you had an emergency expense. No, sweet girl. Hold on, not right now. You want to buy a house. You want to invest in more crypto. You want to buy some stocks. Whatever. You want to take a trip. You can actually take out a loan without having to sell it. You can take out a loan against your crypto without having to go to a bank in almost instantly, in a couple of clicks. Another beautiful thing about DeFi is you don't have to go to some Karen sitting behind a desk at a bank, have them go up your ass with a probe and ask for your tax returns for the past 3 years, and want to see want to review your credit history, and all these different things. All you got to do is have collateral. You got collateral? Perfect. You get a loan. People like myself, more than happy to supply you liquidity for a loan if you have the collateral. Because if you default, then I'm guaranteed to get my money back. Why wouldn't I? I mean, talk about a perfect financial system where me and you can provide liquidity to each other almost risk-free. There's risks involved, but almost risk-free. There's protocol risk and things like that. Again, this technology is evolving. There's hacks and things like that. Aerodrome had one. Again, I'm gonna tell you all the facts. Aerodrome had a URL exploit a while back. Somebody hijacked the URL and had a site that looked exactly like Aerodrome, and some people lost money. Aerodrome did a great job, repaying those people, which is a testament to the longevity of the platform. But it's a risk, so we need to be realistic, about our investments. Again, both good and bad. What else we got, y'all? Aligned for growth. All stakeholders, from institutional investors to the Aero Foundation and Dromos Labs, earn through the same mechanics, structurally aligning the interest of all participants. So, institutions, they are staking just like me and you. They get no special treatment. They have to, what used to be locks, they have to stake Aero, the Aero token, just like the rest of us. They don't get any special treatment. They don't get any special bonuses or rewards for being institutions. I love that. It's a democracy. It's everyone's treated the same. All right. Let's see what we got here. How much time we got? We got plenty of time. I apologize. I know that I'm just a lot of this I'm just reading to you. I just want to make sure I get it right. So, but I'm gonna keep giving you the info here. So, Aerodrome and Velodrome, both built on the MetaDEX 02 model from Dromos Labs, prove that exchanges can put token holders and liquidity providers first when. Together, these protocols have processed 342 billion in trading volume, distributed over 1.3 billion in on-chain value to active participants, and captured a leading market share of volume on nearly every chain where they are deployed. The future. While decentralized exchanges fragment value across isolated chains, again, any project, I want to make sure I say this right, any project that isn't moving towards removing the friction between layer ones and layer twos, and removing bridges, the manual bridging and swapping between all these chains that aren't integrating and creating bridges cross-chain, are going to get left behind. If something is not EVM compatible, if a DEX is not EVM compatible, if it's not able to move liquidity to other L1s and L2s, it does not have longevity. It just doesn't, plain and simple. Because to be part of the rails of the new financial system, that liquidity is going to need to be able to move seamlessly wherever it needs to go. That's the whole point of all of this. So let's see. Predictive allocation. This is something that that was kind of talked about recently at the convention that's going on right now. When decentralized exchanges debuted, they were simple, self-organizing marketplaces. Liquidity providers deposited assets and earned fees. Pretty straightforward. Although this enabled a whole new level of permissionless, passive market formation, the design could be fragile and reflective. Coordinated marketplaces like Velodrome and Aerodrome solved major issues inherent to legacy decentralized exchange design by introducing a new stakeholder group, the token operator. Token operators vote. This is the epochs, the voting, each week to direct the following week's liquidity rewards. For this service, they earn protocol revenue. That's the yield that you earn each week. That has accumulated from those pools that they vote for. This creates a steadier stream of rewards for LPs and creates the conditions for powerful liquidity bootstrapping for emergent tokens without established markets. And not just tokens. Well, yeah, I mean, yes, tokens, but like tokenized assets, stocks, bonds, private credit, any tokenized liquidity requires an underlying liquidity pool to be able to move that value, to swap between assets. It's just the way it works. All right. Although a step change forward from the past, incentivizing people to allocate resources based on a pool's past performance, the weekly voting system creates two limitations. It can be slow to respond to emerging opportunities, and it can sometimes stream rewards to pools that are no longer productive by the time a new week begins. Enter MetaDEX 03. In November, we announced MetaDEX 03 would solve these problems, or these issues, with the AER, engine gauge gaps and dynamic emissions. First, gauge caps would limit the amount of Aero a pool could receive based on market activity. In doing so, they function as a security feature for the DEX. More specifically, if the value of emissions exceeds the value of fees generated by a pool above a set multiplier, gauge caps can capture the overage and burn it. I like that. Burning reduces the amount of tokens in circulation, reducing long-term inflation. Exactly. And extractive farming. The multiplier limit can be set flexibility for different pools based on the liquidity incentives required to optimize for competitive dynamics. Let's see, what can we do here? I want to get to some meat here. This predictive self-correcting allocation, it's interesting but highly technical. I'm going to save that for the interview I'm hoping that we're going to get coming up. What do we got here? So crispy, no. So the flight school ends on the 8th of April, the last one. Yeah, no worries, Crispy. But there's still a strategy, even if higher risk. Okay, you guys are talking about trading. I'm not a trader. What do we got here? Yeah, not to mention the influencers pushing their paid partnership with leverage, trading sites, posting their wins and sometimes fake wins. Yeah, I'm not a fan of all that. I'm not a fan of trading. It just and there's nothing wrong with it. I mean, there's people that are highly successful at it. I just I'm not good at it. That's that's why I got in DeFi. It moves more at my pace. I can provide liquidity, and I just love that slow trickle of yield, and my bag's just building. I that's I'm not looking to get rich overnight. I'm just looking for, and I hate using this term because it's not accurate, but it's a term a lot of people use, passive income. I just because it's not passive. I mean, you got to keep an eye on things, and you got to be moving stuff around here and there. But I just like the idea of earning 10, 20, 30, 40%, slow and steady, and just adding to my bags. Because when these markets do, and some of the assets that I'm invested in eventually pump, then assets that I got at much lower prices are going to be worth a lot more. And if I'm able to earn yield on those, and I'm earning, say that I have $10,000 in an asset and it 10x's, just for round numbers, and it's $100,000, and I can earn 20% on that. I'm now earning $20,000 a year off of that $100,000 of free money. So what is that? What, 1,500 ish, like 1,400 ish dollars of a month of just money just trickling in that I can reinvest. I can take a trip, go out for a steak dinner, whatever. It's that's why I'm in this. I financially I'm comfortable. I'm definitely not driving a Bentley, and I don't got a private jet or anything like that. But I got a roof over my head. I'm warm and dry. I got good food on my table. So my investments in crypto and in DeFi is to augment is to augment my lifestyle, is to improve my lifestyle. And that's why I'm able to stay so unemotional about my investments. Is, yeah, I've lost money on some investments, but, net, I'm up, as far as my token count, on good projects like Ethereum and Bitcoin, Canton, Aerodrome, what I feel are good projects. So I'm just stacking. I'm just stacking those tokens for when that pump comes. When I feel what I feel is an eventual pump in price appreciation, and then I can just start peeling off that yield. And again, if I have one asset where I'm making $100,000, and I have another asset I'm making 50,000, and another that I'm making 70,000. Each one of those, if I'm making 10, 20, 30%, I'm making $1,400 off one. I'm making $800 off another. I'm making $300 off this one. And if that's just this stream of monthly income, where I'm making an extra 3, 4, 5 grand a month, I'm driving a gravy train with biscuit wheels. And again, I'm going to be peeling all of that off into stables and just letting that build, and just have that be like my little kitty fund, my little slush fund. If I want to buy something, if I want to take a trip, that's the money that I use. If I want to buy, some more assets or invest in something, that's my dry powder. And of course it's going to be sitting in DeFi, even if it's only earning 3 or 4%, a year, it's money that's trickling in. My Coinbase card that I got, I'm earning 3, 4% off stuff I'm spending money on anyway. My groceries, my gas, all the different apps that I use to do this show. Canva to do the thumbnails, and StreamYard to do the stream. I pay for all that with my Coinbase card, so that I get free Bitcoin. It's not a lot. I mean, I've made a couple $100, in the past couple of months. I've made a couple $100 in free Bitcoin, but I mean, I'm spending that money anyway. I might as well DCA into Bitcoin while I'm doing it. And it's kind of cool. It's kind of fun. I fill up my tank, And it's like, oh yeah, here's $3, here's $4 in Bitcoin. I check out at the grocery store. I mean, as soon as I freaking swipe my card, a couple of seconds later, ding, another $3 or $4 in Bitcoin. And it's just everywhere I'm spending money. Like sometimes I'll be sitting here, I just hear a ding, and I got auto charged, for my blue check mark on X, or StreamYard charged me or whatever. It just, if you can get to where you're just earning on passive liquidity, liquidity that you're spending anyway, why not earn on it? Liquidity that you're having sit in a bank account that you're not earning anything on, why not put it on Coinbase? Or if you don't like Coinbase, put it on something like Uphold. Uphold, they FDIC insured. They have up to $250,000 of insurance on your account. All the same safeguards and stuff like that. And I haven't looked in a while, but I'm sure that there's yield earning opportunities there. Why not? That's what we're trying to teach here. That's what we're trying to educate here. Crispy just sold XRP. The remaining Good Morning Crypto bag is gone. Flight school lock activated. Great group of guys over there at Good Morning Crypto. I love those guys over there. I spent years over there listening to them, and positive, super positive energy, super good guys, and most of the information they give out, great information. Just a little too biased on the positive, a little too biased on the positive aspects of XRP. And I don't know how they do it. I haven't watched them in a while, but day in and day out, 5 days a week for like an hour or two, they'll do nothing but talk about XRP. I don't know how they do it, and stay interested in just a single project. Hats off to them though. But again, great group of people. I'm not trying to throw shade at all. It's I couldn't do it. I gotta point out everything. What else we got here? All right, sophisticated allocators win. Predicting trends and flows in blue chip assets is a valuable activity, but for allocators that favor more upside, long tail assets can offer more opportunities. Correctly predicting a window where a token takes flight could provide tremendous upside while the rest of the market adjusts. When fee spikes hit, early allocators win. I like this. So you can get fee spikes. So if there's high volatility or high volumes, and there's a lot of swaps going on, then sometimes fees will go up, and it's not much. A lot of times it's like a couple of cents, or 10, 20, 30 cents to do a swap or something like that. Still very, very cheap comparatively, especially if you're doing it like on a centralized exchange or something like that. Aerodrome is one of the cheapest places to do swaps. But in those high volatility markets, if you're already in, you're not jumping in during, then it looks like you're going to, you're going to get a much more upside. So a lot of this being automated, it's going to know when you provided the liquidity, and how long you've been providing liquidity for that pool, things like that. So I'll be honest, if Aerodrome ever gets a Canton pool, I'll probably be allocating heavily to that, just straight up front. I'm not going to freaking sugarcoat that, because and probably all the yield that I earn off of it, I'll probably if I can do that autopilot, I'll auto convert it into more Canton. I'm trying to build my Canton bag as much as possible. Oh, here we go. I want to hear more about autopilot. So we'll talk about autopilot, and then I'll end this. Yeah, hype and BTC would be good ones to to swap into. Actually, I'm glad you bring that up because I am wanting to build a hype bag. Yeah, that's true. Yeah, Freak Atomic. It's you can have flowers and butterflies and everybody with positive energy, but it doesn't necessarily mean it's a good thing. I just don't like throwing shade about people unless they're able to defend themselves. It's I think the XRP army's a cult. I'll just say it flat out, just in general, just because I've yet to find anybody that will have a open debate with me about XRP. I mean, it's one of the most hyped, most talked about tokens on the internet, and people just posting endless, bullish posts about how XRP is going to change the world, and all these institutions are going to adopt it, and they ignore anything negative. And if you point out anything negative, you're just FUD. You're just throwing out FUD, and it's like, no, fact check me. Come on and freaking debate me. I don't care who you are. I don't care if you're freaking Brad Garlinghouse. I don't care if you're that like it's been a while. I can't remember his name. The weird guy with the long hair was the CTO forever. Yeah, it's just I don't care who it is. I mean, if I got on with somebody that was like crazy technical, that started using a bunch of like highly technical terms, I'd probably need David with me so that he could decipher what they were talking about. But just nitty gritty tokenomics, Ripple, what they're trying to build, what they claim they were trying to build, and how that narrative has evolved. The introduction of RLUSD, all of that. It's a night and day difference. And that whole narrative that they're going to be the cross-border liquidity, chain that everyone's going to adopt, and it's just not the case. It's just not the case. They were going to replace Swift. Swift upgraded with Linea and Ethereum, and Chainlink, basically. So it's just you really got to keep your finger on the pulse. You can't be lazy. You can't just go off hype posts on how you invest. All right, so let's get into this autopilot and we'll end this thing. All right, not all allocators will want to participate at this level of granularity. You're not going to want to sniff out exact pools and manually decide where to put your liquidity. Fortunately, the design space for designing products and strategies that utilize predictive allocation is endless, especially for a new class of DeFi users, AI agents. Again, X402. This is where the automation comes in, and using AI agents. For allocators looking for a hands-off approach, they'll be able to configure management of their position through autopilot and upgrade to relay. So the VE Aero Maxi Relay that I'm in and a lot of people are in, it automates your voting. It's so I don't have to go in there every week and manually vote and find the pool that I want. And it was a bit of automation. It would basically you'd put it in that pool, and I use that term loosely. There might be another term for it, but you would allocate it or deposit it into that, and it would seek out the most stable yield. And it's fluctuated between 20-30%, but and it just basically votes for whatever pool is going to make that 20 to 30%. And you can just forget about it. And it's just every week it's voting for you, and it's paying you that yield and compounding it back in. Just full automation. But you stay max locked at 4 years. That clock to unlock your locks isn't counting down. So the AI agents will craft strategies for themselves, but also will provide a wide variety of strategies to stakers. Again, It's going to be called staking, not locking. We are in the early stages of building an agent marketplace that will curate these opportunities for users to select their risk profile. So I love that. You can diversify into different levels of risk. You can have an AI agent that does the majority of your portfolio, of your stake, and say 80%. And that's going to be in safer plays, lower risk. You can have, 15%. That maybe you want to take a little more risk and lever up. And instead of earning 20%, you can earn 30 or 40%. And I'm just throwing numbers out there. I don't know what the yield's going to be. And then you can have the remaining amount and you can put into high risk. And maybe you can earn 50, 60, 70% or more. And, but it's a small amount of your portfolio. So, from what it looks like, you're going to be able to have customized AI agents that can execute your investing strategy for you. And also what assets you want returned. So again, the yield. Traditionally, it's always paid out in Aero tokens. But if you want to have it paid out in Bitcoin because you just want to stack long term, you can do that. If you want to stack USDC so that you have dry powder for dips or to reinvest or to live off of, you can do that. Whatever you want, you'll be able to get paid out in that asset. And tokenized stocks, I would love if that was the case. I would guess so. Anything that's available on Aerodrome or, for that matter, Coinbase, I would think would be available. So, if you wanted to have your Aero stakes, your yield, buy Tesla stock, master strategy. If you want to, whatever, you can just have it trickle into those, and some of those pay yield, 10% or more. So, this is a great way to fuel your portfolio, to grow your portfolio organically. If you want to inject, more fiat, more liquidity, you can. But what better way to build a retirement than to self-custody and automate your own portfolio? You don't have to go to a broker and have them take all, the massive amounts of fees and, and all of that. A lot of these investments in DeFi, you're able to access liquidity without incurring a taxable event. So, like taking loans out against your Bitcoin. And I'm not a tax advisor, and, things are always changing. I'll give you that disclaimer. But you do not pay taxes on debt. So the rich, the wealthy, my brother Taylor, he's an estate planning attorney, has his own law firms. He's on Mondays. A lot of the wealthy, they live off debt. They have massive amounts of assets. They own real estate, they have stocks and bonds and whatever. But the way they access that liquidity is different than retail. They take out loans against it, so they never sell it. They keep that exposure, but they're able to access the underlying liquidity to reinvest and live off of and do different things. But at the same time, they don't pay short or long-term capital gains because they didn't sell the asset. They just took out a loan against it. So that is the beauty of things being tokenized, is in DeFi, you can take out loans with a couple of clicks. Bob's your uncle, and you have the money for a down payment for a house, or to do a remodel, or to take a trip, or buy a car, or a medical expense, or whatever. That is the beauty of DeFi. So, and organically, building your portfolio. One other key stakeholder group that will experience positive impacts from the upgrade to Aero and predictive allocation is the community of projects and token launchers incentivizing on Aero. Aero will give projects a whole host of new ways to achieve their intended outcomes. At launch, projects will be able to flexibly stream incentives to any token, either to stakers allocating rewards or to LPs directly. So we've seen this in our community, and you had to manually vote on this. I believe it's called Launchpad. New token projects could incentivize people to vote for their liquidity pool, to bootstrap liquidity for their project, so people could swap to get exposure to that asset. So it was a way to boost the amount of yield you earned for that epoch or that week. Again, epochs are going away, so it'll be interesting to see how Launchpad works. But it's an extra incentive, and you see this on DeFi quite a bit. There'll be a base yield, and then there'll be an incentivized yield on top of that. So maybe you'll earn 10% in base yield, and then another 3% in incentives. So great way to earn extra yield, but potentially it could add more risk. Under VE voting, liquidity payments became a key method for projects to incentivize deep liquidity, bootstrapping numerous successful projects. Like with epoch voting, though, liquidity payments can be improved. Under MetaDEX 02, tokens used as incentives unlocked and released to voters a single point in time. For projects, this meant a large amount of new supply hit the market all at once. Not ideal, because you get sell pressure. That's what you see in token unlocks. Like say, VCs and the team of a project got an allocation, and there is like 6 months, 1 year, at certain points in time, there's unlocks. You can pretty much guarantee that there's going to be sell pressure in a dip, because VCs, venture capitalists, they want their money back. They want to make a profit so that they can reinvest into new projects. So you can almost guarantee that there would be a downward pressure on on those assets. Same thing. If you just get this flood of tokens that are coming onto the market, people are going to be selling stuff off so that they can reinvest in other things, or enjoy those profits. It's just how investing works. For voters, it was difficult to value liquidity payments prior to an unlock, as both rewards and incentive value could shift dynamically after that supply hit the market. This meant emissions might be inefficiently allocated, giving LPs potentially volatile signals. Streaming to predictive allocators allows projects to direct liquidity incentives to parties that stay aligned over time. So not just in and out. If you deposit your liquidity and you are aligned with that pool over time, then potentially it can boost the amount of fees that you earn from that pool. If I'm understanding this correctly, don't quote me, but again, if I understand this correctly. While allocators receive a steady stream of information rather than having to bet on the uncertainty built into one-time events, LPs will also have a more predictable experience with the stream of Aero rewards updating gradually versus oscillating between large weekly shocks. This allowing, and let me see if I can decipher this. So when the way that it currently works, each epoch or each week, you see the APRs and things like that of yield and like the flight school and all those different things. You see a certain percentage that you get. With this new predictive model and how it adjusts in real time, you're going to see, and it might not be real time, but near real time updates on the yield that you're earning, all those different data points that you're going to want to know, so that you understand and you can ensure that you're staying profitable. This is also going to give real time data if you're using one of these AI agents that's managing your portfolio. If something was high risk, or say it was low risk, and it moves into a medium risk parameter that you have set, then maybe it will get you out of that pool and put you into one that fits more accurately the parameters that you set for low risk. So all of this, it's all about data. The more accurate, more up-to-date data that you get, or that your AI agent gets, the more efficiently and effectively it's going to be able to manage your portfolio. So I'll leave that at that. We also anticipate that the option of streaming incentives will improve the Aero Ignition launch model by creating even more optionality for users, while also creating a compelling experience for other token launch products. More details to come on how predictive allocation will impact the token listing and gauge creation process. All right, let's go back to here. I want to make sure I didn't miss anything on the main website. So here's all the chains. Actually, I did miss some stuff. Let's go through this. Yeah, I don't think I touched on this. Yeah, get on board the best place to trade. Swap tokens across all of Ethereum. I touched on this. Day one, Aero will allow anyone to swap tokens across the entire Ethereum ecosystem, automatically routing trades through the deepest, most efficient liquidity on any connected chain. Beautiful. Next, get on board the best place to earn. Put your assets to work. Provide liquidity, earn competitive rewards, or stake Aero to coordinate the network and earn a share of exchange revenue. Covered all that. Best place to launch. This is mostly for builders. It's just, and it is. It's a great place to launch. And this is that Aero Ignition I was talking about. So ignite deep on-chain liquidity as part of your token generation event. So they can apply for the Aero Ignition and launch pool. So you can launch the pool, and that's it. It's Aero Ignition, not Launchpad. Aero Ignition. So this is where they can supply basically incentives for people to provide liquidity to their pool. Infinitely scalable across the Ethereum ecosystem. I won't get into what each of these are because some of these I don't recognize, but you got Ethereum, you got Base. I believe this is Circle's ARC. They're Ethereum, their EVM compatible chain that they launched. This should be Uniswap. That's Inc., which is Kraken. This is drawn a blank. Never mind. We'll move on. But yeah, all Ethereum layer 2s. Zero leak economy with 100% value distribution. Aero will stream 100% of exchange revenue directly to Aero stakers who coordinate the flow of liquidity. So let's see what we got here. Anything sexy here? No, that's where we started. All exchange revenue goes to the token. No private token sales. All parties earn through participation. That's another thing. The MEV auctions, they've been a problem in the past because people that know what they're doing can front run token launches and extract a lot of liquidity. And it screws people that aren't super knowledgeable about crypto and how to do that. So they came up with MEV auctions. And through MEV auctions, it's going to allow price discovery before a token is launched instead of after. So if you look at a lot of charts of tokens when they launch, they get that initial pump and then dump. So they get that initial pump, and that's usually when VCs and people that got in before the token launch, that's when they're usually selling off. They're basically dumping on retail. And then that's when you see like that big plunge. And then you see it kind of hopefully trickle its way back up, and it finds a range. It finds its price, and it's able to kind of find its happy place. What these MEV auctions do is they get that volatility all out of the way ahead of time. They get that they allow the project and the token to find its price range, to find that happy place before the launch. So then when it launches and people are buying it and swapping into it and things like that, you're not swapping into something that's going to dump, 70, 80% on you. So it's a lot nicer of a model. And I really like that they're doing that. I think that's going to bring a lot of people are going to be onboarded to new projects, because of that. They're not going to be as sketched out by that track record of dumping happening on new projects. Infrastructure for the future of the on-chain economy. We already talked about it. Optimized for AI, institutional grade. They're going to have Aero will be the first participant-owned liquidity infrastructure to meet the complex need of large-scale organizations. From KYC, know your customer. Again, this is the compliance aspect I talked about. Verification requirements to programmable payments and rebates for high-quality order flow. Built for integration. Aero's modular architecture and adherence to industry standards will ensure that any wallet, aggregator, or decentralized app can plug into its best-in-class execution without friction or high development costs. This is key. So if you're bullish on Aero, it's not just Aero. Developers can actually, let me make sure I phrase this right. Developers can build dApps. They can build, DEXs. They can build, aggregators. They can build different, things, and they can plug into the liquidity on Aerodrome. So it's not just people that come to Aerodrome. So say a bank or an institution or you want to build something and you need access to liquidity, you can build it out, have access to the liquidity, and basically that would allow you to bootstrap a project. So say that you wanted to start like a crowdfunding. You wanted to start something with crowdfunding, and help small businesses bootstrap to liquidity so that they can get their business up and off the ground. Then you could start build a dApp where people could post what it is that they're doing and whatever. They can put up collateral, tokenized or either crypto or tokenized assets, or they could even eventually tokenize their business, and you could access the liquidity of Aerodrome to fund that. That's my understanding. Again, do your own research, but that is what they're doing. I don't, again, I don't know if if there's limitations on what types that they're going to allow, or if there's any kind of vetting that they do. But the fact stands that the new platform is built for integration, and people are going to be able to build dApps and aggregators and things like that, and plug into the liquidity and have access to the liquidity on Aerodrome. So that much is fact. But the example that I used, take that with a grain of salt. I was just trying to come up with an example. Track record of success, helping Circle accelerate the effects of chain FX. And this is foreign exchange. Aerodrome has supported deep liquidity for USDC and the Euro based stablecoin on Base, helping drive efficient stablecoin trading and on-chain FX activity. So people that are into Forex, people that are into trading currencies, this, the new Aero platform is going to have that. Making a home for Bitcoin on Base with Coinbase. Aerodrome and Coinbase teamed up to bring Coinbase wrapped Bitcoin on Base to the masses with over 107.7 billion in cumulative volume. The number one Bitcoin pool on chain in 2025. So this is more than, Uniswap. This is more than anybody else out there. This is the power of, Coinbase and Aerodrome and the Base network and what they're building and onboarding. Those barriers to entry that Coinbase is working on. That is what is allowing the volume. And keep in mind, this was done with Aerodrome only on Base network, not on Ethereum, not on any other EVM compatible chains, just base network. Imagine when this new one launches and they have, Ethereum mainnet, when, because they're already beating in a lot of ways Uniswap, but Uniswap is multi-chain. It already has, Ethereum and EVM compatible chains and all of that. Aerodrome has only been on base network, and they're beating their pants off of Uniswap already in a lot of ways. Not all ways, but a lot of ways. Imagine when the playing field is even and Aerodrome has access to all that liquidity and, plus the on-ramp of Coinbase. And, with Coinbase updating its UX, UI, and, allowing for, one click, they've been advertising a bunch of it, one click loans with Bitcoin, one click DeFi, being able to, without leaving Coinbase, the offerings on Coinbase, the engine behind all of that, like their loans, their Bitcoin loans and their Ethereum loans, that's powered by Morpho. That liquidity that is being used for that is coming from Morpho. It's not coming from Coinbase. It's coming from Morpho. That's why I'm bullish on Morpho. A lot of the other DeFi offerings, the non, borrowing and lending, the liquidity pool, and a lot of the other stuff that's coming in the future is going to be powered by Aerodrome. 60% of the volume and TVL on the base network is Aerodrome. Base's basically their Kickstarter, their investment arm. They invested heavily into Aerodrome. They own locks on Aerodrome, or excuse me, staking on Aerodrome. So the relationship is there. The customers are being onboarded. The liquidity is being onboarded. I see the writing on the wall. I'm invested in Aerodrome. I hope you found this useful. By all means, please do your own research. I'm sure I didn't get 100% of this right. I did my best. That's why I was, trying to read a lot of it, straight off the website and things like that. I didn't want to, mix up words or anything like that. But again, I'm working on trying to get somebody from the team to come on and, really line this out. Tomorrow, I'll be eagerly awaiting, the announcements that are coming out. And, and I'll be, making sure that that information gets out to you all as quickly as I can possibly get it out, via our Discord, X, and future episodes here. So if you haven't, please like, follow, and share, the channel. If you find or found anything that we offer here valuable. Yeah, I appreciate you, Freak Atomic. Thank you, Ellie. My boy Jay. Yeah, if you haven't, check out Jay and Ellie on Sundays and Wednesdays in the evenings. They actually get on and game. They've been playing a little bit of Arc Raiders recently. So if you're into gaming, check them out. And yes, like I said, please like, follow, and share. Go to the node.pro. Check out the stuff that we offer there at no charge. And also, the couple of services that we have that we do charge for. If you want to help support the channel, all of that should be going live here soon. Like I said, David took the morning off, so I'll be contacting him about those errors that I was getting on there. But let's see. Let's see. Want to make sure I didn't miss anything. You can find us here at the node_channel on X, at the node channel, all one word. And again, here is our website, thenode.pro. And you can find DeFi University, our 100% no charge to you course. I can't use the F word. Where you can learn DeFi. You can learn all about crypto, DeFi, our existing financial system, how banks work and operate, the stuff I was talking about with fractional reserve banking and all the fees. And we teach all of that, and it costs you nothing. All you got to do is just take the time to click on it, listen to it. It's all automated. It's built out. They're lessons. You don't have to sit there and read if you want. You can read it, but there's videos, and it walks you through all of it. You can listen to it in the background while you're driving. You can do it while you're working. Doing your work while you're working. Cleaning the house, whatever it is. There's no excuse to not be learning this stuff. So, I guess that's it. Man, I did. I went for 2 hours. Hooray me! By myself, all but my lonesome. My voice held out. I appreciate y'all, and hope to see you later. Actually, yeah, later tonight. So Jeff should be going live with the blockchain report here in about 30 minutes. And tonight, me and Jeff will be going live with Crypto and Chill. If you want to join us tonight, we're just going to be hanging out and just again talking about life and talking about crypto. So till then, Veteran Crypto out.